This is Team Trump, and our screencast is on corporations, including sub-S corporations and C corporations. My name is William Brown.
We also have Stefan Hill. I'm Lysandra Piercy.
Brian Porterfield, and Trevor Woodworth.
Alright, so what are sub-S corporations? According to entrepreneur.com, a sub-S corporation is a special form of corporation that allows the production of limited liability but direct flow of profits and losses. This could be appealing to tax benefits and still provides business owners with the liability protection of a corporation. Income and losses are passed through to shareholders and included on their individual tax returns. A sub-S corporation must have no more than 75 shareholders, and the only people who can be shareholders of a sub-S corporation is individuals, states, certain trusts, certain partnerships, tax-exempt charitable organizations, and other S corporations. What are C corporations? C corporations are pretty much the opposite of sub-S corporations. Most corporations are C corporations. C corporations, according to Investopedia.com, is profits passed through to owners and are only taxed at the individual level, and limited liability companies which provide the legal protections of corporations but are taxed like sole proprietorships.
Incorporations. One advantage of incorporating is that it creates limited personal liability. Incorporating includes many different owners of the company. Therefore, you are not the only person responsible for a mistake that affects everyone in the business. Another advantage is that it makes a company or a business more credible to the consumers. Consumers are more likely to trust a company that is incorporated because there is not just one person making decisions. Therefore, there is less chance of human error occurring. There are two options of incorporating a business: C incorporation and S incorporation. Advantages of sub-S corporations. Sub-S corporations pass through taxation. There's no corporate level taxation, and shareholders only pay taxes on their dividends earned at their marginal tax rate. Disadvantages of sub-C corporations. Not the best choice for large corporations or businesses. You're not allowed to have more than 100 shareholders, and owners sometimes have to pay taxes on profit distributions that they did not receive if the profit is reinvested back into the company. Advantages of C corporations. There are a lot of owners or shareholders. Type of incorporation: if a company is going to be publicly traded, has a lower tax rate on the first $75,000 of business income. Even if it is a small business, this type of incorporation can be beneficial to the owners. Disadvantages of C corporations. C corporations have double taxation. Taxes on the corporate level as well as the shareholders must pay taxes on the money they receive in dividends. It's also more of a formality. You must hold shareholder meetings, you must have a board of directors, and you have to take corporate minutes at every meeting. So what are bylaws? Bylaws are rules and regulations that govern the corporation. The creator of the corporation, or the incorporator, usually writes them. Sometimes the board of directors will write the bylaws, and this constitutes the first action of the board. Unlike the articles of incorporation, the bylaws are not filled with any state or federal regulating agency. Bylaws are an internal document used by the organization to govern its operations. Bylaws often are broken down into articles that govern shareholders, the board, and the company's stock. So what are in the bylaws? These are some sections that are going to be in the bylaws. The first section is the name, purpose, and office. So in this section, you're going to include the name of your organization, which should be stated in the bylaws, as should the purpose of your organization. You need to ask yourself, what is the reason for your organization's existence? And finally, you should state the specifically where your offices are located. Next, we have members. This section should detail the various aspects of membership, including the different types of members, the membership selection process, members' voting rights, and the procedures for disciplining and/or removing members. If there are no members, state that in this section. Next, we have the Board of Directors. The Board of Directors is the primary governing body of an organization. This section should discuss the composition of the board, which may be a specific number of directors or a maximum or minimum amount of directors. Also, discuss how vacancies are filled, whether they are filled by the board itself or by the membership. And finally, the bylaws should specify the qualifications for serving as the director, the duties of the director, the length of a director's term, and the possible classes in which they are elected. Next, we have committees. This should detail any specific committees in this section, including their formation, how they are appointed, and their specific duties. The roles and responsibilities of the executive committee, which usually makes the recommendations to the board, should also be discussed here. Some common committees in an organization are an audit committee, membership committee, and a nominating committee. Next, we're going to talk about officers. Officers are members of the board who perform specific functions on the board, such as the president, vice president, secretary, and treasurer. This section should discuss how the officers are selected, as well as their duties, powers, responsibilities of each officer. Also specified in the bylaws are the procedures for removing an officer and filling a vacant officer position. Usually, a nominating committee is outlined in this section, which recommends nominations to the board. Officers' length of terms is also specified in this part of the bylaws. Meetings. Any regular, annual, or special meeting needs to be discussed in the bylaws. This includes the time, and place of the meetings, the requirements for notifying the board, committees, and/or members, attendance stipulations, and most importantly, how many board members are needed for a quorum. A quorum is the number of directors needed to vote on an issue at hand. Next, we have conflicts of interest. It is important that an organization has a conflict of interest provision in their bylaws. This protects them from IRS penalties which may occur if the IRS finds the organization providing unfair benefits to directors, members, or others. And last, we have amending bylaws. The bylaws should contain specific rules as to how they can be amended. It should also state who can recommend amendments and how these amendments will be voted upon.
Next, we're going to talk about Articles of Incorporation. Articles of Incorporation act as a charter to establish the existence of a corporation in a state and gives basic information about the business. The Articles of Incorporation is filed with the Secretary of State's office or similar agency that handles registration of businesses. What are included in the Articles of Incorporation? The Articles of Incorporation must include, at a minimum, the corporate purpose, name and addresses of your corporation's registered agent, and stock information. The first point is the corporate purpose, usually stated in broad language such as to engage in any lawful activity in order to avoid limiting the corporate's business projects. Next, we have the name and addresses of your corporation's registered agent, who will be authorized to physically accept the delivery of certain legal documents, including lawsuits on your behalf of your corporation. Next, we have stock information. This includes the number of shares the corporation is authorized to use, or to issue, designated of classes of shares, and the value of each share. The Articles of Incorporation will usually identify the incorporators of the corporation, who initiate the incorporation process and are often responsible for signing the Articles of Incorporation prior to filing within the state. If the articles name their directors of the new corporation, the directors may also be required to sign the Articles of Incorporation before they are filed. A new business's Articles of Incorporation do not necessarily need to be completed or extensive. If you decide to write them yourself, your Articles of Incorporation will likely be accepted for filing in your state as long as they contain the minimum information. In all states, the filing the Articles of Incorporation requires the payment of corresponding filing fee, ranging anywhere between $35 and $300, depending upon the state of corporation. Next, we'll talk about the annual report key information. The annual report is split up between 4 major categories. 1. General information on the business entity. This could be anywhere between the name of the entity, the fiscal year end of business corporations, or the nature of business. Second, we have the registered agent information consisting of registered agent's name of record. 3. Principal office information consisting of the physical address and mailing addresses and telephone numbers. And then lastly, you have officers/members/managers information, which could be a list of all officers, their titles, and their business addresses. Next, we'll talk about how to submit an annual report to the Secretary of State's. You have 2 options here. You may file online at the Secretary of State's website, which is listed right there for the state of North Carolina. Clicking on File Annual Reports Online allows you to file your report in about 10 minutes. The fee payable by credit card or electronic check is paid online. Your second option, you may file a paper copy. You will submit the report and fee directly to the Department of Revenue along with the tax return. You can download a pre-populated annual report from our website. Annual reports are usually due on or before April 15 of each year following the year of creation. And here's our works cited page. Thank you for watching Team Trump's screencast.